clearly, there's no doubt that the U.S. economy is slowing, especially in sectors such as housing, but also manufacturing, which are more sensitive to the rising interest rates. The path to a soft landing for the U.S. economy has clearly narrowed with the rapid and front-loaded tightening that we're seeing. But in our base case, the U.S. economy is still on track, still on this narrow path to a soft landing. 3 reasons why we think the economy and the Fed can tame inflation without triggering a recession. Number 1, if you look at the broader price news after the worrisome CPI news last week, you're seeing some more encouraging signs, whether you look at wage growth or certain supply chains. Second, we actually think that activity growth needs to moderate to a more sustainable pace. And third, when we look forward, we believe that the rapid tightening in financial conditions that we have seen will allow demand growth to return to a more sustainable pace, will allow supply to catch up, which should ultimately bring wage growth and price inflation back to more sustainable pace. So a narrow path, but we think we're still on track for a softish landing.
What role do you think, though, that the housing market is going to play? Obviously, we all have the memories of many years ago of the massive housing crash in the United States that rippled around the world. And we're already starting to see some cracks appear. I mean, on top of the data point that we just mentioned overnight, we also got the NAHB Home Builder Sentiment Index this week, which showed a fall to levels of 2 years ago in the middle of the panic of the pandemic. Already declines in demand. Affordability obviously has been an issue and is only going to get worse with rises in mortgage rates. Is it going to get bad?
So we expect housing activity to fall somewhat further. But the starting point for housing activity was extremely elevated. As in many other sectors in the US economy, demand was excessive relative to supply. And that also helps to explain why rental growth and home price growth have been so elevated, feeding into the very high inflation numbers. And so our forecast is that housing activity moderates, normalizes further. And ultimately, this moderation in housing activity, but also in home price growth that we expect, should ultimately allow the U.S. economy to return to a more sustainable growth pace, and should also allow to bring inflation back to the target. But there are clearly risks of a harder landing in some of the advanced economy's housing sectors, because affordability is very low and falling as mortgage rates are rising. So the risks are probably the greatest in terms of a hard landing for housing in markets where home prices rose the most, such as New Zealand, Australia, and Canada. But in most of these markets, at least at the moment, supply is still very tight. And it's because the supply is so tight that we're not forecasting a hard landing in housing in the baseline.